Good day, everyone. For today's basic accounting episode, we will be talking about accounting for merchandising. Merchandising is a type of business that buys or sells goods. There are two major activities that happens in merchandising, but do not occur in the service entities. These activities are the buying and selling of goods. A merchandising firm may be wholesaler, which buys goods for resale to retailers, or a retailer, which buys goods for resale to customers. Take note that if we're going to compare merchandising and service, in service companies, they provide services. There are no products involved, while merchandising involves buying and selling of products. These are the different accounts in merchandising. We have sales returns and allowances, sales discount, freight out or delivery expense, merchandise or merchandise inventory or simply inventory, purchases, purchase returns and allowances, purchase discounts, freight in, cost of sales, or cost of goods sold. Take note that I want to focus on the sales returns and allowances or the purchase returns and allowances, simply stating that returns and allowances only occur when you have to return the certain items that were purchased or items that were already sold. On the other hand, the discounts are given during the sale or during the purchase, depending on the point of view. The freight that we're talking about here is actually the shipping fee or the delivery fee that you have to pay. If it's freight out, it is actually delivery expense. If it's freight in, that is part of your cost of goods sold. Now, the recording of sales and purchase transactions. Sales is an account used when merchandise are sold to customers, either cash or on account. When we talk about on account, and if it's a sale, it's actually accounts receivable in a point of view of the business. Meanwhile, purchases is an account representing the amount of goods or merchandise bought by the entity from suppliers, either on account or cash basis. If it is a purchases on account, it is considered as accounts payable in the part of the business. These are the pro forma entries to record purchases and sales. Take note when we talk about pro forma, this is the template that we will be using in the purchases and of course the sales. So for purchases, debit purchases and credit cash or accounts payable depending if it's on a cash basis or on account. For the sales, cash, debit cash or accounts receivable and credit sales. Let's try this problem. Transaction of Feb 14, 2024. Angel Merchandise purchased the following goods from Princess Trading, a wholesaler, per invoice number 002915. Now, who is the seller in this portion? Correct, it's Princess Trading, and the buyer is Angel Merchandise. So as you can see there, the quantities, the description, the unit costs are given, and I want you to focus on the total amount, 47,250. The requirement states that we have to record the transaction of the seller and the buyer on a cash basis and on account. Okay, so we'll be recording two for the seller, cash basis, and on account. On the other hand, for the buyer, cash basis and on account. If we're going to go back to our previous presentation, these are the pro forma entries. We just have to record the amount of 47,250 pesos. So for cash basis, both for the books of the seller and books of the buyer, and if it is on account, both for the books of the seller and for the books of the buyer. You may pause this video for you to catch up with the different accounting entries or journal entries. Next is the accounting treatment of discounts. When we talk about discounts, layman's term, may bawas. Okay, it's a deduction from the invoice price. Sales discount. Now, the discount actually depends on the point of view of who is the seller and who is the buyer. If it is a seller's point of view, it's sales discount. And if it's a purchase discount, it is on the point of view of the buyer itself. Okay, you can pause the video if you want to read the descriptions flash on the screen. Pro forma entries for the payment transactions are as follows. Payment transactions. To record the sale purchase transactions, we have here the books of the seller, this one, and the books of the buyer. Okay, to record the payment within the discount period, take note, discounts are given for prompt payment. Okay, in this example, as you can see here from the record of the sale purchase, have recorded accounts receivable and accounts payable, and therefore the transactions are actually on account na binenta, on account na binili. Okay, now to encourage prompt payment of the receivable or the payable itself, the buyer or the seller usually offers discounts, and these rather are the pro forma entry if the payment was made within the discount period. Okay, we have to record the sales discount and the purchase discount on the other hand, and payment beyond the discount period, whatever is being recorded in the first part, the sale purchase or the sale and purchase transaction will be the same if payment beyond the discount period. Okay, technically binaliktad lang natin sila if payment is beyond the discount period na. Okay, so how do we identify these? Let's try this one, the princess trading. Okay. So we have here a an actual receipt, an invoice. And the as you can see, the date here, if we're going to look into the details, it's the 47,250 originally shown before, and it is now in a form of invoice. We have a date of invoice, Feb 14, 2016. Let me go to the presentation. Yes, this one, and it's actually a leap year. Why do I ask if it is? Why did I mention rather if it is a leap year? Because it will matter later on. And please use the counting system that I mentioned in class about memorizing. If you cannot memorize the number of days in a year and if it is a leap year or not, just use your knuckles. Okay, so January, February, March, April, May, June, July, August. It's the same 31 days. September, October, November, December. Now, the February part is a special one. If it is a leap year, it's 29 days, and if it's not, it's just a regular 28 days. Now, why does it matter? Because we have to count the number of days for the terms here. The terms that is being presented here is actually a discount period or a discount terms. Now, the terms mentioned, we have 2 over 10 and 30. What does it mean? 2% is being given as discount if payment is within 10 days from the date of invoice. And if it is beyond 10 days from the 11th day going to the 30th day, no discount. So it means that you have to pay, the due date is on the 30th day from the date of invoice. Okay, now going to the fastest way of counting things, 14 plus 10 is 24. Therefore, from Feb 14 to Feb 24, the discount of 2% is still present until the 24th of February, and there will be no discount until the 15th day, 30th day rather. So when is the due date in this example? So from Feb 14, leap year, 29 days. So 29 minus 14 is 15 days. We'll add another 15 days going to March. That's March 15. So the 30 days from Feb 14 going to March 15. Deadline is March 15. Okay. So what are the requirements? Record the transaction for information provided in the invoice on the part of the seller and the buyer under the following assumptions. Payment is made on Feb 22. That's assumption 1. And payment is made on March 1, 2016. Again, when is the last day of the 2% discount? That is on Feb 24. And therefore, only the assumption 1 has a discount. Assumption 2 has no discount. Let's proceed with the record of the sale and purchase transaction. So yes, we'll just do the regular, and the assumption here is all transactions are on account. To record the payment within the discount period, within the discount, so this is the assumption 1. So for the books of the seller, we have a 945 pesos discount. Where did we get that 945 pesos? Simply multiply the invoice price of 47,250 times 2%. You'll get the 945. The difference is your cash payment. And to record the payment beyond the discount period, since it is beyond the discount period, whatever is your sale or purchase transaction will always be the same with your payment beyond the discount period. Okay. Next, accounting for returns and allowances. Returns and allowances, 2 point of view, it could be sales returns and allowances, purchase returns and allowances. The return of goods due to defective goods, wrong specifications, and erroneous quantity. returns and allowances is a contra account. We do credit memorandum or debit memorandum for these. We'll just follow the pro forma entry. For the books of the seller, we debit sales returns and allowances, cash or accounts receivable. For the book of buyer, cash or accounts payable, and purchase returns and allowances. We'll use the same problem from the Princess Trading, same invoice, but with an assumption. On Feb 15, 2016, Angel Merchandise returned 2 pairs of brand X. So this is a brand X. 2 pairs of Bs were returned because of wrong specification and did not intend to have them replaced. Meaning we have to record purchase and sales returns and allowances. Angel Merchandise. So technically this is a purchase returns and allowances. From the point of view of the books of seller, the Princess Trading, that's the returns and allowances. How did we arrive with the computation of the 1,260 pesos? Because there is a two of which were being returned, and the price of each is 630 pesos. 630 times 2, you'll get 1,260. Okay, and then next one is the books of the buyer. We have here the Angel Merchandise, accounts payable, purchase returns, and allowances. Technically, it's the reduction of the accounts receivable and the accounts payable of each of the books of the seller and the buyer. Next one is the freight in. Freight in is a freight charges paid by the buyer, additional to the cost of purchases. Freight out is freight charges paid by the seller, part of the operating expenses of the business. So for pro forma entries, we have here for the freight in, since it is a point of view of the buyer, so we'll put freight in and then cash for the buyer. And then since freight out is in the part of the seller, we'll put here freight out and then cash. Since binayaran natin siya for the freight delivery fee, so kaya naka-credit po yung cash natin. Okay, so what does FOB mean? It simply means freight on board, but sometimes we say free on board. Sino ang free on board? Is it the seller or the buyer? And who actually owns the merchandise or the product? Siya dapat ang magbayad. So there are different terms being used. We have FOB shipping point, FOB destination, shipping point. Later on, malalaman natin kung ano bang meaning ng shipping point and destination. For now, let's proceed with the term on payment of shipment. If it is freight prepaid, the seller paid the freight charges at the point of shipment, while freight collect, the buyer will pay the freight charges once the goods arrive at the point of destination. Freight prepaid, freight collect. Okay. Next one is again just an illustration on how freight is being charged. Here is from the seller's place, that's the shipping point, and the destination is the buyer's place. Take note ha, galing kay seller, papunta kay buyer. Freight on board or fee on board. Who will pay the freight charges? That's the question. Shipping point ba or destination? If we talk about the shipping point or FOB seller, this means that the title of the goods passes to the buyer as soon as the shipment leaves the seller's warehouse or shipping dock. It also means that the seller should record the sale when the goods leave the warehouse. Here, the buyer owns the goods and route to its warehouse, thus must bear the delivery fee. Again, when we talk about FOB shipping point pa lang, si buyer na ang owner. And because si buyer ang owner, siya na ang magbabayad ng shipping fee. Ayan na, sa baba, since buyer already owns the goods at shipping point, buyer pays the freight. Again, titingnan natin here, FOB seller, free on board si seller. Sinong magbabayad? Si buyer. FOB shipping point, buyer. From FOB destination definition means that the buyer owns the title of the goods once the goods arrive at the buyer's dock. The ownership title rests with the seller during the transit. FOB destination, si seller pa rin ang owner, kaya si seller ang magbabayad. Since seller still owns the goods while being shipped, the seller pays the freight. And therefore, other term of destination, free on board si buyer. Sino ang magbabayad ng FOB destination? Since free on board si buyer, it's the seller itself. Okay? So just to illustrate, shipping point from the shipping dock going to its destination. Okay. Now, there are different combinations from the shipping point and destination, freight collect, and freight prepaid. So, may 4 tayo na combination. FOB SPFP, FOB SPFC, FOB DFP, FOB D, FC. Okay. So you can pause the video for the pro forma entries for the FOB FP or freight prepaid to record the payment for the seller, accounts receivable and cash, freight in for the books of buyer. Why there's a freight in for the books of buyer? Free on board shipping point, free on board si seller, therefore si buyer ang magbabayad. And then FOB shipping point, freight collect to record the sale. It's just the same. Let's focus on the record payment. To record the payment of freight, no entry for the seller kasi nga free on board si seller. So, freight in, accounts payable. Next one is destination, freight prepaid, freight out. Kasi nga, free on board si buyer, si seller ang magbabayad. No entry for books of buyer. Okay. For the FOB destination freight collect, freight out to record the purchase sale transaction. Freight out is being recorded here in the books of seller. And then, directly purchases, accounts payable, and cash for the books of buyer. Okay. Let's proceed with the inventory system. In merchandise inventory is the amount of goods that remains unsold at the end of the accounting period. Inventory system refers to the set of procedures followed in handling, recording, controlling, and valuing the inventory of the business organization. There are two types of inventory system, periodic system and perpetual system. To simply compare the two, periodic system and perpetual system, when we talk about perpetual, it always updates the inventory count. On the other hand, the periodic system only updates the inventory count at the end of the period. Later on, you will see the difference in the accounting entries or journal entries, pro forma entries of both periodic and the perpetual system. In most cases, the POS system or yung ginagamit ng mga grocery stores, alin ba sila sa dalawa? Periodic ba yun or perpetual? Perpetual system because it always updates the inventory count. Okay? So here are the different periodic inventory system and perpetual inventory system, account titles used, inventory tracking, stock card usage, financial statement impact, physical count, business sustainability, and the use of technology. Please take note that there are some typographic errors here. Okay, let's proceed with the pro forma entries of our inventory system. So we have here the periodic system, perpetual. Take note, when we use periodic system, we actually use the purchases. If we use perpetual system, we use the merchandise inventory because the merchandise inventory here is being updated from time to time, but periodic system will be at the end of the period. Okay. Example, transaction. Purchases on account, 180,000. Periodic purchases accounts payable. If it is a perpetual system, we use the term merchandise inventory. Paid freight on purchases. So freight in, cash. Merchandise inventory, cash, because it is the freight in is part of our merchandise inventory. Return merchandise to suppliers. So we record purchase returns and allowances. In this part of the perpetual system, we deduct directly the accounts payable to the merchandise inventory. Sold merchandise on credit, 200,000, gross profit rate, 40,000, accounts receivable, 200,000, and sales, 200,000. In this, another example, since it was given that the gross profit rate is 40%, our formula is sales minus cost of goods sold, is equal to gross profit. Sales is always the 100%, and if the gross profit rate is 40%, therefore our cost of goods sold is 60%, which we can see here. So if we sell a certain merchandise in the periodic system, to simply record it with accounts receivable and sales. For the perpetual system, you also have to record the cost of sales itself or the cost of goods sold. Return of merchandise from customer, 10,000 pesos, gross profit is 40%. So I believe it's connected with the previous one. So we just recognize in the periodic system, sales returns and allowances and accounts receivable. On the other hand, in the perpetual system, we have to record the 10,000 sales returns and allowances and the accounts receivable, same with the periodic system. However, we also need to record the merchandise inventory and the cost of sales associated in the return. Okay, so you may pause the video for you to recap all of those transactions and what are the implications of the periodic and perpetual system. If you have any questions, you may contact your teacher. And that's it for today's lesson. I hope you learned something and good luck on the assessment. Thank you and have a great day.